Good afternoon, everyone. It is Wednesday, June 4th, 2025. Stocks up again. Does the macro even matter anymore? And we're going to talk about that. We'll do a short video today. Not a lot to discuss. Market was quiet, but I do want to just kind of hit on a point right after you guys hit the like button and subscribe to the channel if you haven't already. If you like trading content, producing content every single day for the last 4 years. Also, come find me on carnivoretrades.com for swing trading alerts analysis and live day trading on a roll right now, too. And we'll be having a sale coming up pretty soon, too. So stay tuned for that. But again, we'll do a short video today. Again, we are very quiet. We're just basing for another trend here. And what did I talk about yesterday, other than stocks up, yields up? And what I've been talking about lately, really, is that again, like this, the macro here, the shot clock's running out on bears, time's running out on bears. This is what I mean. You had a what did I say was the only thing that might derail the rally? I said a 5 sigma beat in jobs. We got basically a 5 sigma beat in job, or miss in jobs rather, and it was 37,000 versus like 110K, right? The market should have crashed on this. Bonds rallying, TLT rallying hard off this. This is like not a good print. It's a very like deflationary style print. ISM missing completely this morning. So how much was the market down today? Oh, it wasn't down at all. In fact, we had a flash sell of about 20 points, and within 30 minutes we were right back at the highs. Another flash sell on ISM. Within 20 minutes, we were right back at the highs. The market doesn't care about the macro right now. We're talking about this every day. And yet people don't want to, not most of you guys get it, but there's so many people out there on, Finex and everything, just don't get it. They're just trying to fight it. They got it. And, I spent all last summer preaching this, and I'm doing it again. I'm going to be preachy again because I'm trying to get it through, everybody's head here, because this was me, at one point. I had to learn this all the hard way. What do I mean by that? I mean by this. Oh, everybody's buying calls, but really, because every single day, put premiums are dwarfing calls. And the same thing on SPY, too. They are buying puts into this whole rally. They're fighting the whole thing. And they're trying to, force their macro view onto this market. The market is it's a voting machine, right? It's not always about the fundamentals here. And if everybody knows the fundamentals and everybody's positioned that way, then who's left to sell it and who's left to go short, right? And that's sort of the premise here of most of this rally. But yeah, again, market set up here, based for trend, nice tight structure, in bull flag inside of a bull flag, whatever you want to call it. I will say right now there is there's definitely some resistance up at 6K. There's definitely some, call wall action up there right now. And we can take a look here at the terminal. Well, actually, we got Tesla up here right now, but you can see, we'll just look at Friday on S&P. If I can get it to come up here. But you can see, I don't know why it's not working now, but we'll just use SPY. So you can see on SPY, there's 600, and it's pretty decently, positively positioned. But at this point, if we got up there very quickly, which we're kind of, not that far off, we're probably going to need to burn out some of those calls before they're going to want to push it through that. And, technically we haven't tested it since, really, I mean, you could argue we basically touched it these 3 days here. Yeah, this day we did get through it. So really since the end of Feb. So, and granted, I don't think it's going to take like weeks to get through this because we have been basing for almost a month. So maybe a day or two, again, like I talked about earlier this week, or, there's always a good shakeout or two when you have these trend moves that do, manifest here. But, make no mistake, it's going to, we're not going to be looking at 100 points. We're going to have multiple hundreds of points here. So we've been basing for a while. NQ is strong here. And market's acting well. Again, retest here. Higher lows just following 20 moving average trend is up on all time frames here. So market's still acting well, no problems. Again, we're looking at similar summer rally, most likely compared to or comparable to last year. We will have jobs on Friday. Again, could we get some volatility off of that? I get a lot of questions about in the comments. What do I think the market wants to see? I don't think it matters. That's kind of my overall point. We just saw like you had every excuse to have a 3% down day today, and we didn't even sell off more than 20 points. That's my overall point here. We would have to have probably like a negative report. I'm not sure what the actual expected is for Friday at this point. I can take a look at it. I mean, 130 non-farm and then 110 private. Yeah, I mean, if you had a negative print, maybe that would do it. But again, we're so deep into this cycle here that it's going to be very hard for this down. One thing that will be interesting to me, at least, the market is not, and again, this is not going to change what I'm saying here, but I just find it interesting from a level of interest standpoint. The 2-year took a pretty good hit here. So the bond market is responding, and 2-year yield down 2% here on an investment basis, 8 basis points. Right now, the Fed funds futures are not budging, but I don't know. You get below 3.8, maybe they would. So it is off the lows right now. It's not in free fall, but it is down. So that could affect the June meeting. It hasn't really changed that yet. And to be fair, it's not like this is like breaking down terribly, but it is rolling over a little bit. So just something to consider there. 30-year losing that 20 MA. Again, it's not broken. Trend is still up, but something that could come into play here. Granted, the thing, I said yesterday about yields up, stocks up. I forgot to put this chart on there. I did tweet it last night, but people are like, oh, well, the 30 year is going to go to 1 billion% or whatever. Like 5, not billion, you know what I mean? 5-6%, whatever they want to say. This looks like a pretty positively correlated chart to me, and it looks like they bottomed on almost the exact same day, and they're positively correlated right now. So I don't, like I've been saying, I don't think yields are really going to hold this market back. There's plenty of reasons bond yields can go up and down, and the market does not have to go down or up based off of those. Also, our bond market weakening does not all of a sudden make everybody else's not be absolute trash as well. Anyways, thank you for attending Aaron's Carnivore TED Talk. Hope you guys liked the video. Let me know in the comments in the comment section. Come find me at carnivoretrades.com, and I'll see you guys all tomorrow.